Is today's stock market rally a trap? Well, buckle up because we got some stuff to talk about on today's Stock Market Brief show, which if you don't subscribe to the channel, I'd consider doing so. We try to get a market brief out here multiple times a week. I try to do daily, but you know how it gets sometimes. We got timestamps in the description below. We're going to go over performance. We're going to go over the futures. Talking ES, NQ, Ruddy, and YM. So we're going to get into the S&P 500 market conditions and talk about some sectors here too on today's episode. So buckle up. Let's get into it. All right, ladies and gentlemen, welcome back to the show. We're taking a look at the heat map of the S&P 500. And today we got some green on our screen. NVIDIA, a whopping 4.89%. Tesla up there at 2.14. And then we had things like Microsoft, Apple, relatively flat, had some bullish momentum there in Google and Amazon after selling off, right, just prior day or so, where we got a little bit of sell side action. We're getting a little bit of a bounce. But there's a lot of focus here on NVIDIA, right? Because NVIDIA, well, holds this market together. It's one of the largest market cap names, if not the largest market cap. They've been going in and out between NVIDIA and Apple. But not only that, it has its highest implied vol there too as well, which means that can really shake up markets. And I think that's going to be important because, well, we have earnings for NVIDIA coming right around the corner after the close on Wednesday. There's a lot of focus on that. So we'll talk about the NVIDIA chart momentarily. If we take a look at the 11 sectors that make up the S&P 500, we had tech lead the way. We had energy and financials down there towards the bottom. And then we even had utilities outperform, which we're going to talk about some interesting charts on utilities from various banks that just posted this information. So I'll talk about that in a moment here. Now, what you notice here on the screen, if you pay very close attention, which I know that you are, towards the bottom, we have the VIX was up 5% on the trading session. How is that possible when the S&P 500 and Nasdaq was up? Well, guess what? VIX is an implied volatility. So implied volatility is rising. That could lead us to believe the reason why is NVIDIA earnings. Today started off pretty rough, right? We look at the S&P 100 advanced decline line in the early trading session. We only had 11 stocks that were up, one being NVIDIA, and 89 of those S&P 100. I'm saying S&P 100 because they're the largest market cap names in the S&P 500. That can move actually markets, okay? We had 89 declining stocks here. And, well, by the end of the day, well, it was just okay, a little bit better. But we still had 63 declining stocks, 38 advancing stocks, and NVIDIA closed there at the high of the session. That's how you know NVIDIA is an important stock to this market. So we got to talk about it. Let's take a look at the daily time frame. So the last time we really talked about, I believe, NVIDIA from a technical perspective, it was when, I think it was right around this area where price action was getting tight. So if you go to those videos and want to see what I had to say about it there, just look at these dates and you'll be able to pull that video up. And basically what we're saying was we can look for a break of this trend line. It started pulling back and we started moving forward from that. And it was bullish, right? We still saw higher lows being formed and we still see higher lows being formed. And this is what we talk about in market structure too. Right? It's a time to be cautious when you have lower highs, but when you start seeing higher lows and then price getting tight, it offers up really good risk to reward. Now, in this specific compression pattern, if you want to do a measured move, you can measure from the high down to the low of where this is, and you can measure it from the breakout area, which brings us into and around about 176 would be a full measured move of this compression pattern. And I mean, there's no reason not to believe that it can't get there given the context of this current chart. Now, tomorrow we have earnings and the market in this current moment is pricing in a plus or minus $12.97 move. So $13. Now, we don't know where the market's going to close tomorrow, but this will probably be the same, if not higher, by the close. So if we close higher, right, these levels can obviously go up with it, or if it closes down lower, these levels can go down with it too as well. Now, something that is not going to change is the weekly implied move, which we have yet to hit. The upper level, which if you want to see these levels, it's 158.17 to the upside, which is right about here. So this is still, in motion for potentially getting hit if the market likes what it sees. And then we have down here, right, if the market doesn't like what it sees, you see the lower levels for the daily implied move. And then also, which is not, it's an earnings implied move, not daily. It's an earnings implied move that I'm pulling up right now. at 134 and then 125. So right now, there's really no reason to believe why it's going to break down all of a sudden, unless obviously earnings come out and the market doesn't like it. Now, starting new positions into earnings, just be very careful and understand that, hey, going into the close, it's going to probably be around $13 to $15 per share, right? $13 to $15 per share of an expected move. And if you think of it in terms of a distribution curve, 68% of the time, even higher probability, we're going to be tagging one of those. Okay, we're going to talk about some futures right now. And I wanted to pull this up because I think it's important to look at this. You get a lot more cleaner picture of price action when you look at the futures market. You get that continuity that you don't quite get with like an SPX chart or a SPY chart. So I wanted to pull this up and just kind of go over a couple of these indice products. So this is ES, and I measured a move from this last pullback over here to this recent high. And when we got up to this candle, right, the last time I talked about ES was at this candle over here. I can't really quite remember. But we were saying there's a likelihood of a pullback now. There's a higher likelihood of a pullback because of what we're noticing with the candle structure, right? So you see this large, authoritative, strong candle. Then the body all of a sudden gets a little bit smaller, but it still moves up. Then the body and even the range got a little bit smaller. And then you get up here and the range of the body is even smaller. And this is very, very typical type price action of things going from expansion and to contraction. And what we said was if we start breaking down through the low of these candles, it's likely to see some sort of a pullback in the market. This would be the higher probability of where the market can pull back. Okay, now where did the market pull back to? The market pulled back into, if we measure from this low to this high, the golden zone, right? The Fibonacci extension, or sorry, the Fibonacci retracement zone of 50% to 61.8%. And today we had a pretty significant move to the downside, a little bit of scare, but then we closed higher. So this is known as an outside bar, right? It's a hammer candle for one. So it's this forms a hammer, like it looks like this. And these can mark reversals on pullbacks. So the context here was even if we pull back in and we just don't take this low, the context of this chart would say that this is just a higher low going back towards in around this area. That would be the context of what I'm looking at. And then you get the outside bar, then you get the level of support, right? The hammer candle, all these little levels of confluence are quite bullish for the market. So right now you want to make sure that we can hold today's daily low on ES. I'm going to go a little bit faster here. NQ also had a hammer candle after a pullback, right? It was pretty aggressive sell-off on these days, but then we had an outside bar here. So the thought process here is that we can get some sort of continuation. As long as we don't touch this low, or break this low, this structure would hold as a higher low and a higher high in the near term. Where can we potentially find resistance? I would say right in this area where, you can see that right here, kind of right here, lines up. This high of this candle kind of matches up with this low of this candle, okay? And while we broke through the high of this candle, we saw a big authoritative move, okay? Then price pulled back in and we started finding support here and support there. And then once we broke down, we saw a pretty large thrust back even through this level. So I think that being that this was prior support, prior resistance, turned support a little bit here before the crackdown, this zone in here will be a level that we really need to get back above. So say if NVIDIA reports out and market loves it, perhaps we shoot right through this. Maybe it finds a little bit of resistance or we shoot through it. Start to see if we can hold up this area to potentially go retest these highs over here in the near future. That would be in play as long as we can obviously hold this prior low. If we take a look at Ruddy, RTY, market pulled back to where? To a prior breakout level, right? This pivot level where we were seeing higher lows build into. And it also, from this high, from this low to this high, retraced into that golden fib zone. It actually undercut it slightly here today, but then we started seeing a little bit of a bounce back into and around just above that 50% retracement level. And then if you take a look at YM, did I say YQ earlier? I think I said YQ earlier. YM, which is Dow Jones Industrial Average the mini futures. Also, not quite the outside bar, but you have a pretty large hammer candle that formed on a pullback. And if we start breaking above the high here, that can lead to obviously some sort of a bounce, perhaps a lower high, or potentially higher low, and then we break that high there, eventually there. And this is taking place right in that golden zone as well, above a rising 20-day and 50-day. So people, it's not that bearish especially when you look at this chart. I know that the S&P 500, the island reversal pattern and all this stuff that took place, but I wanted to show you these charts more specifically just to give you some context that we saw increased volatility, right? Not only in the VIX, right? But we've seen increased volatility, even historic volatility now when you look back in these candles. And we saw some bullish momentum today driving to the upside, which is creating these tails, and that could be a positive sign for the market. So we'll find out a lot once NVIDIA does that report. Let's go into the S&P 500 now. We're going to look at SPX and SPY. So we did pull from the weekly time frame. We pulled back into the weekly 5 EMA, and we started seeing a little bit of a recovery from that level. If we take a look at where we stand within the weekly implied move, you can see that we have a plus or minus $9.83 expected move. I think that we're going to be tagging it this week, whether that be the higher or lower. Right now, the probabilities would suggest, based off today's candle, that we can go touch the high, but we shall find out. The market might kind of stall out a bit, or maybe press a little bit higher. We might get NVIDIA earnings, and who knows what can come from that. That's why it's so important to look at these levels, both on the big earnings plays like NVIDIA, and then also the market. Now today, the SPY, as you saw, we gapped down and opened lower, but we closed higher. This was all also priced in by the market to perfection. So if we look at the implied move, that was something that we talked about on the prior episode. We drew out this zone down here, and look at price gap down right into this level, right, which was the implied move for the day. And then we started to get fairly tight right over here, especially on the Qs, and we started breaking above. Now, notice this hammer candle over here, right? You can't probably see it all too great, but we formed a hammer candle, then an inside candle, and then we broke above it. And there we saw a nice move to where the upper daily implied move. So we're back above the week to date, and we're back above that Friday anchored volume weighted average price, which I'm going to now remove off the screen and update you on some of these new zone levels. So the implied move zone for the lower end tomorrow is about 585.50 to 584. So this zone in here, screenshot them and put them on your charts if you would like to. And then we have about 595 to the upside, and then 596. So this zone in here also includes the upper weekly expected move. So coming into tomorrow, the door is open to come tag the upper weekly expected move. And if NVIDIA reports, say if we do come up here and then NVIDIA reports after the bell, I mean, that could blow us right through this, or if the market doesn't like what it sees, it can bring us right back in, which is quite interesting sort of setup going into tomorrow. Another thing that I noticed was this little double bottom, and this double bottom can now be called the double bottom because we broke this little neckline over here. And you can see a measured move would be from this low to the neckline, and you measure it up. That would also be right there at that daily implied move for the day. So that would be some target levels that I'd be looking for if we're going to get some more bullish price action. I want to go over market conditions here in just a moment, because it's important to note that we're still below a declining 5-day moving average, and it's very typical once we get extended from it to have bounces back. You got extended from it, and we saw bounces back, and we're still in the shorter term below that declining 5-day moving average. And I'll talk a little bit more about that in a moment. But on the flip side to that was this chart, which was on the thumbnail, and this is the bullish percent index for the S&P 500. And while the market pulled back and seen a little strength, ta-da, we are starting to see a bullish divergence form a little bit more cleaner here. So the RSI is getting to 28.22. We're still at a relatively high reading over here for the bullish percent index, which means 60, okay, the reading 61.6, which means 61.6% of stocks in the S&P 500 are on buy signals based off of the point and figure charts, those tic-tac-toe looking board charts, okay? So you saw this put in a lower low, but the RSI currently has a higher low. So if this turns back around, this could be that positive divergence, and we could see the market try to reach back once again for a new all-time high. All right, let's go to market conditions. Now, this is where it gets interesting, okay? We're seeing a bounce. It's exciting. We got earnings. It's exciting. But just be aware that we still have declining 5-day moving averages in the SPY, in the Qs, in the IWM, in the XBI, in the DIA, which is the Dow Jones Industrial Average, in the semiconductors there too as well. So it's going to take about 2 days. Okay, why? Because right here is the 20th, and this 5 days ago is pretty much, I think, right about here, okay? I think that's about accurate, or a little bit less. Somewhere right around here. The thing is, the 5-day moving average is looking back at 5 days of data. So as we're here and we start losing this data, it's going to start averaging in the new data. So this is still going to come in. So what you want to see is the market to go up. We start to exit out of this data here and then start pricing in higher data, which will give us this to flatten out and potentially turn back up. So even if we come in and it still pulls in, if we can hold in and around these levels down here and we start losing this data in the next couple of trading sessions, the 5-day moving average will start to flatten out, and it'll give us an opportunity to potentially get back above it and then start to turn back up. So that is a good sign as it stands. Now, if we gap up, right, it's going to start averaging in this data and it'll start losing this data here, right? And it'll start to flatten out there too as well. All right, so that is going to be important to continue to watch for this 5-day moving average to start changing shape, right? Look at over here, right? In the corner, it was pulling down. We started seeing it turn yellow, right? It started to kind of flatten out there, which means it's a kind of a more cautionary sign, but it started getting back above it. This is when we also got into positive gamma territory there too as well. Okay, so that's what I'd be watching out for. Now, from a gamma perspective, we are back into positive gamma territory. And on yesterday's video, if you go towards the end where we talked about this gamma chart, we talked about 58.50, how it was likely to pull back into 58.50, but I want to be bullish above it, and I want to be more cautious below it. So we came into 58.50, chopped into it a little bit, and we ripped right from that level. So this level is just solidifying just how important it is that we hold. So 58.50, key level, positive gamma territory, also a good sign. So we get through NVIDIA, get through the earnings, volatility, and we're holding above a gamma flip line. Volatility will probably come in, right? Which means that S&P 500 will look for dealers to start buying the dip, selling the rip, buying the dip, and that's what drives volatility down. So 58.50 was tagged there. Now in the SPX itself, this happened during the pre-market, post-market. I believe it was pre-market that took place, and this chart is the SPX, right? SPX 500 USD. So it's looking, I just like this one because for its continuity, so we can see things like this. But the SPX chart itself, CBOE obviously was closed and opens during the cash market session, and it did not tag it. All right, let's take a look at some of the sectors now, and I want to just do a quick snapshot. You can still see a lot of red on the screen, and the ones that are green, take a look at energy, right? It pulled back a little bit, saw a little bit of strength into the close, still above a rising 5-day moving average. Utilities saw some strength, and that's the one that I wanted to talk about because utilities is getting rather strong, still above a rising 5-day moving average. And then we had real estate too start to get into the green as it was yellow, and then guess what? It started turning green. That's why we'd like to look for when this takes place because it can mark a potential change in trend. XLC also turning yellow, which means that we have a declining 5-day moving average, but price is currently above it. And everything else there is pretty much red on the screen. Semiconductors is right by that 5-day moving average. So we'll see if that has some strength in the near future and see if these can start changing. It'd be much more bullish for the market if we start getting technology to play, XLY to play, and some of these risk-on type assets to play, and some of these risk-off assets kind of take a little bit of a back seat. Now, utilities I found to be interesting because this is a risk-off sector, and we're starting to see things being posted by various banks in their research. This is one of them that they were just showing utilities versus staples, and they're just showing us index relative performance, and then utilities versus healthcare. So utilities out of the risk-off assets is one of the stronger assets and has been. You can see in 2024, it's been basically vertical. And then I forget which bank posted this one, but this is looking at the 10th to 90th percentile. So 10th percentile, 90th percentile, and then we have the median right here. And we're looking at basically Z-scores. And when it kind of gets extended, overextended, underextended, right? Oversold, overbought, whatever you want to call it. But we're kind of coming into this area where the position in utilities is really, really bullish. And these can be somewhat contra type indicators. So the thought here is that, hey, just careful with utilities because not only are they really, really performing all the other risk-off assets, they are also getting quite frothy on some other measures there too as well. Doesn't mean they can't go higher, obviously, but this one's dating back to obviously 2009. You can see there's periods of times where we oscillate from these highs back down to lows, oscillate from highs back down to lows. So if you want to see this chart a little bit closer, just screenshot it, zoom in, kind of look at those dates of what happened to utilities when they reached into these levels. That's all I got for you on today's show, everybody. Hope it helps out. See you later.